With screams from most and thunderous applause from others, Bitcoin rocketed down 20% the other day, bringing us back down dangerously below the $50,000 level and putting most traders in a place where I believe they call it tying the noose. I believe that's the appropriate term for it. Anyways, we're going to look into all that today. Hopefully you guys are doing absolutely fantastic. Welcome to another episode of the Cracking Cryptocurrency Show. As always, my name is Justin Wise. I'll be your host for today. And this is what we do. Hopefully you guys are doing fantastic wherever you happen to be tuning in from, whether that's across the seas, whether that's from my backyard, dangerously, or whether that's from the comfort of your mother's basement or your own basement. Yeah, definitely not judging. Anyways, we've got a great show for you guys today. We're going to be talking about the dip. Obviously, we're going to be talking about buying the dip, something that typically tends to work pretty well. We're going to be talking about some of the new strategies that we've coded up and some of their results. The first two signals from the super duper automated DEMA strategy, yes, that's the name of it, that we started patching through to Discord so our members could receive the automated signals, was successful on its first trade. That's what we like to see. We'll be testing that on new markets and seeing how we can adjust. We'll also be talking about some of the adjustments that we made to that as well. So this does double as a premium member update also. Okay. With that being said, welcome everybody in the chat. Let me know how you guys are doing this morning. Let me know what you guys are watching this morning. If you guys have any chart requests, throw those in there. I will attempt to get those to the best of my ability, but we are going to focus primarily on the big dogs today and overall hedging strategies, in addition to what individuals can do to protect their capital, in addition to what I think the market is in general going to do, and try to kind of look at things that I think other people tend to ignore or don't notice, or just have tunnel vision when a period when the market does a large move and people tend to just get focused on the charts and price. So we're going to look at all that. Anyways, without further ado, let's get right into the live scene. Here we are in the live scene, looking at the Bitcoin. All right, let's quickly talk about the big movers of the day so far, and the day's not over, but tends to be pretty good until the afternoon comes in. So coming off these big dips, obviously, of course, this is no surprise. Bitcoin correcting 20%, most altcoins correcting just as much, and in most cases, significantly more. So some pretty significant dumps from the altcoin space, as is going to happen. Capital floshing off to BTC. And one of the most interesting things was, so I was at my desk. This did happen late at night when this dump did ensue and really did begin on Friday evening. And
it was a good feeling. Diamond hands. It was a good feeling, obviously, calling the shorts on Friday's show in the afternoon and then having those play out well. And again, there's no magic. There's no prediction here. There's no magical indicator that lets you know where the market's going to move. All you do is simply take the signals from the system that you've taken the time to construct. And when you have a trend following system, when the market does trend or put in a big move, you are there to reap those rewards. And when the market just makes a regular move, you're still going to reap those rewards. It's kind of a nice thing. You take yourself out of the job of attempting to predict which way the market's going to move, and you simply trade in the direction that it is moving. You don't attempt to time reversals. You don't attempt to predict when it's going to do what it does. It's the best way that I know to trade. I've traded lots of different ways, and if you want less stress, if you want to enjoy more time with your family, then stop trying to predict what the market's going to do. Don't call the top in a bull market. Don't call the bottom in a bear market, and just simply go with the flow. Be like water, as Bruce Lee said. However, we're going to contradict that here in a few seconds because that's what we do in trading. Anyways, we've got BitTorrent token up 15.4%, OKB up 9%, BSV moving a little bit, 6.4%. For anybody who's been following the Craig Wright lawsuit, let me know what your guys' opinions on that are in the chat as well. I've been following that. There's this lawyer who's been making pretty good recap videos. The only problem that I have in general with those videos is that one, he doesn't really know too much about Bitcoin. So he does have that little bit of, but sometimes maybe that's a good thing. He's tending to view the space from an unbiased perspective. However, what I have noticed is that a lot of the BSV fanboys have kind of flooded in there. And in his last video, which was almost an hour long, he did have that Bitcoin historian, but that individual was from CoinGeek, and they are known. Well, you guys know what CoinGeek's all about. So they are directly in line with BSV. So there's no what's the word I'm looking for? Conflict of interest there, I suppose. All right. Shout outs in the chat. We've got Stu Wowak said buffering. What I have found out is that buffering has almost nothing to do with my upstream link and everything to do with other individuals' downstream link. That is the truth. CryptoBull21 says, hey, good morning. Crypto Jenny is holding on in the chat. Mr. Ether Robert Warner is holding on with diamond hands, who's been using the 133 moving average to hedge his BTC and Ethereum, so his Bitcoin is hedged. Aaron Lynn, shout out to you, my brother. Good to hear from you. Hopefully you're doing fantastic over there. It's probably chilly over there. It's getting chilly over here too, man. I feel you. Lee Ahmed saying hello, and Alex81SG, happy morning to everyone. Okay, let's see here. Basic attention token, one of my favorites, up 12%. Blockstack, again, I love Blockstack. Holder of Blockstack, early investor in Blockstack, rebounding pretty well. What are some coins that are not holding up very well today? DFI, Cadena. Cadena had a long way to drop anyways. Cosmos, KuCoin shares, WeMix, QNT, Near, CHZ, Gala, continuing to give AXS as well. How's AVAX doing? Is AVAX up or down? AVAX is up 4.8%. So kind of interesting to note that the coins that were hot recently are the ones that are not really holding up as well. And again, that makes a lot of sense. A lot of the, a lot of these coins that were really hot lately were making new market highs. And we're putting in signs of like kind of that euphoric blow off top. And when you have that type of situation, when the market does correct significantly, which it did, those are going to be the coins where the investors scramble out of them the fastest because they didn't really get in on the coin due to its fundamentals. They got in on the coin because it was moving up very fast, as opposed to actually having strong hands. So you can see the coins that have a little bit more historicity to them, things like Cake, things like BAT, things like Blockstack, for example, they are holding up significantly better today because I would say that their investors have a little bit stronger hands. All right. Jay Reinhout and Right on Rice, good morning to you guys as well. All right, let's get into this. Let's switch over here to, now that we've talked about those, let's switch over to the chat and we'll just kind of break everything down. All right, so looking at the P2P system here, okay, and this is what a trend following system is often going to look like. Of course, your guys' is going to look different just depending on what type of structure you're using, what type of indicators you're using, and what kind of rules you're using. All right. So I always like to showcase a simplified version on the stream that individuals can just follow along with and understand the basics of, and hopefully that helps them in their own construction process. But of course, we've got lots of material on how to do that as well. Okay, we're going to take bottom feeder off because that is going to be a little disjointing, but we'll point out that signal here in a little bit. Okay. So following the correction off of the recent market highs, Bitcoin did come down about 20% to consolidate or redistribute, I would say, at the baseline that we have on the chart, which we use as our trend status indicator. Interesting to point out that the trend status indicator is going to be pointing downwards right now, which means that with the exception of the automated strategies that we've tested and know to return good results, such as bottom feeder, which we're going to talk about here in a second, the green button doesn't really exist for us. All right, we're only going to be looking to follow the market along in its newly established trend, which, as you guys can see on the daily time frame, is to the downside. Now, I know individuals who have their own systems who do multi-time frame analysis, for example, where they are only trading in the direction of the weekly trend, for example. And if we go if we zoom out here and take a look at the weekly trend, we actually see the more macro dip buying opportunity. And this is always a possibility. You can have multiple strategies run in line, especially if they are non-congruent, if they're giving signals that are in opposition to each other, is one of my favorite things to do. It's not, some people feel that that's self-defeating, but it's not. You want your risk to be offset. That's the most important thing that you can do as a trader, is offset your risk. So for example, you can take weekly long-term positions based on your weekly signals, and you can also trade in the opposite direction of those on the daily time frame or the lower time frames. It's completely up to you. These strategies work, and your results are going to dictate and point out what works and what doesn't as you move forward through time. Okay. So if we do look at the weekly time frame opportunity, we did after the close of the last weekly candle, and this candle obviously just opened up. We do have a reversal baseline bounce opportunity. So again, that is going to be a crystal clear, as sharp as you get them, buy signal right there. Not necessarily buy signal, but low buy-in opportunity here on the weekly time frame. Now, of course, the daily doesn't agree with that. We're going to be getting far more trades on the daily, anywhere from 3 to 6 per month. Sometimes individuals get far more than that. I don't want to say far more than that. I would say if you're getting daily signals like 12 times a month, then likely your system is too sensitive. And when you have a sensitive system, you're going to be getting a lot of false signals and noise a lot. But of course, it just depends on what your guys' results are. You know, if you're getting a lot of signals like that and you're getting profitable results, then nobody really can tell you different. The only person who can tell you whether your system is working well or not is you. That's why it's very important to keep your own results. How much does tax loss harvesting can affect the current bearishness? You know, what's interesting is that is something to consider as we move forward. So tax loss harvesting, for you guys who don't know, is a strategy for reducing your tax burden. So let's say, for example, you expect a positive return on Bitcoin next year, all right? Or you hold a significant portion of Bitcoin. But let's say that you bought Bitcoin at, say, $60,000 and you are down significantly, not super significantly in Bitcoin terms. 30 to 40% volatility intra-month is really nothing that's crazy or different, right? So none of this stuff should scare you guys. But let's say you're down 40% on your holdings. Well, you can sell real quick, right? And you can realize that tax loss and then buy back in, because crypto does not have the wash sale rule applied to it, or at least it's not significantly enforced. But again, I'm not the tax expert. You guys want to consult with your own tax professional to come up with the best strategy for you. But again, that is something that's become more popularized lately to talk about, definitely in the last year or two, as more individuals who have an investor mindset have gotten involved with Bitcoin, and less for the technology, a little bit more for the gains. But hey, come for the technology, stay for the gains. That's what we've always said. So it just depends on, that's really hard, I think, to quantify, because of course we are moving into the end of the year. So this is going to be the time when people are going to want to take advantage of that if they would. And honestly, now is probably the best time. So I don't know. Yeah, it's really hard to quantify. Let me know what you guys think. Let's see here. Shout out to Jordan Stotts, Profit Bear, Alex81. Okay, let's see. Scroll back to the chat here just a second. Thank you so much, Dave Rice. Profit Bear says, that's why I buy high and sell low, so we don't have to pay taxes. Yeah, really stick it to the man. You know what I mean? Alex81 says BTC is basically where it was 10 months ago, so maybe this year it won't be a big deal. 2021 was pretty much a wash for BTC price. Yeah, and if you're looking at that buy and hold return, for sure. What was priced at the beginning of the year? What is priced at the end of the year? Was there anything of significance in the middle? There's always something of significance in the middle. Okay, so getting back to the trading here. We do see Minx giving that initial short signal right here. Now, there's a couple different ways to do this. Obviously, for you guys who are using the early exit system, there would have been 2 false starts where you would have taken a small loss here. Let's see here if we would have got re-entry here. Yes, and a small loss here. Let's see here. And then you could have, the entry right here actually would have had you hold on and you would have been in this trade. You would have held this trade with an entry here on this low candle, or you could have taken the reversal baseline rejection trade right here. I do like that the candlesticks line up with that real nice. You have 3 dojis right there at resistance. And we talked about this before, right? And of course, as you guys know, I actually did hold my short even through these fail-safe exit signals. When I did take the initial short right here, posted that signal to the group, and we had this false start, this false start, and then on this candle we did end up hitting TP1, and when TP1's hit, stop loss gets moved to break even. So we did get out on these candles, and then on Friday we did enter the trade again on this right here, not only off the signal that this system gave, but off the super duper DEMA strategy, which we were showcasing on Friday. That's now automated. That's now running to the Discord. And again, the first 2 trades, both for Ethereum and Bitcoin, were wildly successful. So, interesting things to point out where we're currently at in the market. So on the current daily candle, our momentum oscillator, or our initiator here, Minx, is really deep in, or not, I wouldn't say super deep, but touching the oversold territory for the first time in quite a long time. The last time we were this significantly oversold was right here. The only thing that I want to point out, and the only kind of context you want to take with that type of signal, right? And this is going to apply to any momentum oscillator that goes overbought or oversold. So you can apply this to the relative strength index. You can apply this to the stochastic RSI, anything, the Fisher transform, anything that can go oversold or overbought. And what's important, the concept that I want to convey here is length and how much time the market has spent relatively where it's at. Okay. So when you have, let's look at this area of the market. So this is a pretty significant area of time. So this consolidation area, and there's a lot of volatility here, but this consolidation, you can see here that we really sell off here. We really sell off here for about a good week and a half, almost 2 weeks. And then we reach this range where we consolidate between May 21st and we break out in July. So again, July 21st. So almost 2 months that we spent down in this low dip buying opportunity area, multiple wicks to the downside, and then this jump, and we break out right there. When we see, so for example, this is kind of what I want to point out. So if you look at what our momentum oscillator does, it gets oversold right in this area, okay? And that makes a lot of sense because we were consolidating in a much higher period, and then we moved down with a lot of momentum and high volatility. So it's no wonder that we get oversold in that area. Whenever there's a large movement up or down after you've been in an area of relative little volatility, then your momentum oscillator is going to get pegged. It's going to get pegged real fast. And this is why, if you just backtest like a buy oversold or sell, buy oversold and sell overbought strategy, they don't really tend to work that well. And the reason they don't work very well is because of moments like this. Because, well, you buy the dip and the dip keeps dipping in the case of the oversold trade, depending on where you have your stop loss at. But again, if you're trading with a reasonable stop loss, I've just found that these strategies just don't work. You can use overbought and oversold conditions in any trading system to good effect. But if you just trade them blindly without the context of current market conditions, you can run into some trouble. So our momentum oscillator gets pegged right here. Why does it get pegged? Because we are moving down out of a relative area of low volatility with a lot of momentum. So when we look at the look back length of our momentum oscillator is important. Okay. So if you have a very short length, okay, and then your momentum oscillator basically moves out of that range within that look back period, any outsized momentum relative, or any outsized volatility relative to the range that you were trading in within that look back length is going to tend to peg your momentum oscillator. So you can get what you got exactly right here, where your momentum oscillator gives the signal that you're oversold, and let's say you buy right here, but you had quite a bit more downside, right? It's unlikely that somebody who bought off of this signal right here was going to hold it throughout this entire area, considering this 30% correction that came here, and then again another 17% correction that also followed directly after that. Let alone even this move down here, which is negative 5%, and then kind of seeing a failed take profit, like looking for that breakout trade right there, or looking for that breakthrough as we close above these two highs on this candle, and then again just a swift rejection, another 30% correction right there. So that's rough. However, now that we've been in this range for a little bit, I want you to look at the second such signal that our momentum oscillator gives us. And that's going to be this signal right here. I just want to point these out. So here's the first one that I'm talking about, where we go oversold for the first time. And then the second time that we go oversold right here. And see how much better of a signal this is. This actually captures a relative bottom of the market. It does actually capture the low of the market before a significant rally. And we get upside appreciation from that bottom all the way to the top, 133%. So 133% trade on the table from July to November 2021. Let's not forget that. Nothing to sneeze at. Now, what is the reason that that signal was significantly better in that price range? Because your momentum oscillator was actually tuned to the volatility, to the movements of this range. Okay, it was tuned to the movements of this range. So that when price did get oversold, it was oversold relative to this area, and the signal was much stronger to take. As opposed to this signal, where the momentum oscillator was really being tuned to this area of the market, and then it plunges down, a movement that is unlike what came before, and it gets pegged quickly. And this is actually worse on the RSI and worse on the stochastic. Minx is actually much better at this because it has that built-in smoothing function. And there are things that you can do. So sorry about that, guys. Forgot to put my phone on vibrate. Okay. Now, there are things that you can do with your indicator settings to adjust for this. So, for example, you can set your look back length to a much longer period of time. And if you do that, what you're going to get is much better signals, okay, when you do get them. But let's showcase this. You're not going to get very many signals. So let's remove drawings here. And let's set this to 30. Okay. All right. So let's see here. You get the divergence there. Let's see here. I like that it's still oversold in this area. All right. So doing that didn't give me the greatest example here. So let's just move the goalpost. Okay, here we go. This is a little bit better. Okay. Zoom in on these areas in the market. Okay. So again, showcasing oversold throughout this entire area right here, which again was not the bottom of the market, but did catch that move. I remember that. Does anybody else remember that movement back in 2019? That was a fun one to trade. I'm not going to lie. Well, I don't want to say it was a fun one to trade, but it was weird. I remember this area of the market very specifically. We really called it the screw you candle, especially because of the way the price just kind of moved sideways and slumped to the downside following that. Okay. So this has now turned into a good example of modifying settings to your indicator that you've already tested to work quite well and not getting any better results. So we'll keep it right where it is. So again, the lesson there that I just kind of wanted to point out was when you have a very volatile movement and you're utilizing a momentum oscillator for overbought or oversold territory, and you have a significant market crash or market rally, don't be surprised when your momentum oscillator gets pegged. So here's a good example as well, right? We can see that going overbought in this area, although it did catch a good movement from here to here, was not actually the best place to sell in the market. 1, 2, 3, and it's really on those more subsequent overbought signals. You can see here that the second one is quite good, and so is this third one as well when we go overbought. Those are significantly better signals. Why? Because the momentum oscillator is actually responding to the area of the market that we've been trading in, and not to the area of the market that we're not in any longer that it was attuned to. So right here, we see Minx responding to this area of the market. We're no longer in this area of the market, and so we do have more downside in effect. Whereas in this area of the market, we see here Minx respond with this oversold signal, which is going to be a buy signal as we get the cross back up on this candle was actually the entry signal. And it's a much more powerful signal with more follow through because the oscillator is being attuned to this area of the market and not this area of the market that we're no longer in. So again, very similar to the signal that we're getting here right now. We do see that this is what I wanted to point this out. So we do see that Minx is oversold on the current candle. All right, we are going to be getting that buy signal. The signal that we'll be watching for is for price to move up just a little bit from here. Then what's going to happen is the fast line is going to cross over the slow line after dipping into or possibly in oversold territory and be giving us that momentum signal to take the trade back up to the upside. Now, the way that we do these things is when we do trade kind of reversal trade signals like this, if we trade reversal trade signals like this, we generally only ever take the trade back up to the baseline. So from current price up, we're looking at about a 16 to 17% trade potential ROI on a BTC position right here. Now, we actually do a little bit better than that, specifically with Bitcoin and Ethereum, because we use the bottom feeder algorithm. The bottom feeder algorithm is a highly modified version of Minx that looks at multiple conditions to actually generate those buy signals. So it doesn't just generate buy signals in oversold conditions. It looks at a lot of other things as well, but it also allows us to catch kind of breakout maneuvers like this. Usually once we've had it's kind of interesting how this works too. Usually once we've had a large movement to the upside that is outsized from what we've seen lately, here's a large green breakout candle to the upside, very much outsized from the look back length of the momentum oscillator that we've been trading in. Very similar concept that I was just talking about. And then on the next red candle, bottom feeder's like, no, this is too much selling. This is too much, even though it's nothing. This is too much selling relative to what we've seen. Buy this dip, even though it's not really a dip, and it takes the price to the upside. So very cool signal to see there from bottom feeder. Anyways, bottom feeder has fired on 3 consecutive days now, telling us to buy this dip area. But even more conservatively, it's not even taking price back up to the baseline. We're only looking at about a 9% trade currently from entry here up to 52,856. So that's going to be the trade that we're currently in. There's different ways that you can do this, but I'll just tell you what I'm doing personally. I'm not going to be closing my primary short position. I am keeping my primary short position open, although this has historically been a good take profit indicator for shorts as well. But I don't know why the bar replay mode is on. Let's see here. Yeah, so that's what we got on BTC USD. Now, if we can get back above, so let's talk about the dip buying opportunities here. So I think the correct strategy on the table is to assume the dip buy opportunity is a short-term trade. Now, anytime we get these big volatile spikes down in Bitcoin or in any cryptocurrency, actually, it's usually quite profitable to buy that dip and then take price to the upside. But I'm always very wary. I'm a trend following trader, right? So I don't buy the dip and hold blindly expecting like significantly higher prices. I don't assume that this is going to be the end of this current downwards trend that we're currently in. I don't see any signs of that. The market has to prove to me that we're breaking up out of that trend. And that's the point at which I would switch positions and get back into the long side trade. So what would that look like? What would the market have to do to show us that it is done downtrending and that we are going to get another rally or bull rally? Well, we'd have to be closing significantly above the baseline. So we need to see price pretty much back above 57,000 at this point in time. I believe the baseline is actually coming in at 56,000 on BTC, and I would expect the altcoins to start following along after that. Once Bitcoin proves that it's bullish, then what you'll actually see is some consolidation as Bitcoin kind of flows into other altcoins, and then the rally starts, usually on a breakout candle to the upside. Sometimes that'll happen afterwards, but usually that's the case, right? Bitcoin will be downtrending for a while, and then it will consolidate, and then make its movement up. And then here you can kind of see this is so it actually happens here. This is where money starts flowing into altcoins, in my opinion, and perhaps it's actually here as well, profit taking and Bitcoin consolidating. And then we have that secondary rally, and this rally coincided with huge altcoin gains as well. So kind of an interesting way to see that happen in historical data. Now, Let's talk about current candle formation. We do have reversal candle formation happening right now. We do have yesterday's daily close gave us a doji. Of course, we had this big dump candle that retraced immediately following its lows, and it got down as low as 41,842. And I was watching this live. I watched price jump right back up. We do have a hammer doji on today's daily candle. At least that's the way it's going to be appearing. We do have about 6.5 hours. Hold on a second. No. 4 to 5, so 5 p.m. So we have about 5.5 hours until the daily candle closes. So most of the data is already in there. We do want to wait another few hours, but I don't really see anything massively significantly happening from here to there. But let's go look at the lower time frames and see what we can kind of expect moving forward. Let's go down to the 3 hour. Okay, we're going to take bottom feeder off because it's not a 3 hour algorithm. All right, so we can just see here, pretty big crash, no really big moves. We, of course, Bitcoin popped right back up following that dip, a little bit more sell off, and then we rallied up here, not significantly, but about 6% to where we've just continued to stay. Now, sideways consolidation following a big move tends to continue on in the direction that we've moved. So what I'm expecting here from Bitcoin is if we look up and see, we see the 3 hour baseline, but again, you can use any kind of meso time frame baseline. The 4 hour baseline is going to be almost identical to the 3 hour. 1 hour is going to be real close as well. So you just need to it just depends on kind of what jumps you're making here. But that's coming in around 52,017. So that's almost perfectly attuned to that take profit target on the bottom feeder signal that we were just looking at. So what I would be expecting out of Bitcoin here is a breakout above the current resistance level. So a breakout above 49,000, a test of the baseline, and then most likely continuation on in the direction that we were moving. All right. That's what I'm going to be expecting out of BTC and what I'm going to be attempting to trade. Again, already in my primary shorts, and in the bottom feeder long signal as it did signal. Actually, I took the first position yesterday on yesterday's daily close as bottom feeder pushed to the Discord for our members, and then going to be entering a secondary bottom feeder signal on today's signal. So that's going to be trading it more aggressively. I'm going to be doubling my risk on that position. Of moving from 2% risk on the trade to 4% risk on the trade. Keep in mind though, they're really two different trades because one, of course, it's just an averaged entry for one trade, you could suppose, but you can also treat it as two different trades because each trade is going to have a different buy-in level. The take profit does scale dynamically, so keep that in mind. If you did enter the bottom feeder signal on Sunday, if you entered it yesterday evening, and if you entered it on Saturday, when the first one fired, you're going to want to update your take profit as each daily close changes to reflect what the bottom feeder strategy is actually telling you to do, because that take profit is going to change dynamically as we saw. So let's go look on the daily just to showcase that. Here's the bottom feeder signal, bottom feeder algorithm signaling. And if we enable bar replay mode and go back to the first day it signaled, we can see a take profit of 53,000. And then let's go forward a day. We can see that changes to, we went from 53,000. Go to this candle. Let's see here. 53,548. 53,548 changed from 53,567. So actually pushing up there a bit. And then 52,986. All right. So the take profit has come down dynamically as you are getting a little bit better entries here, just very marginally because we don't have actual big OHLC movements or open to close movements, but nor do we really have very big high to low. So volatility is relatively low in BTC, and we can see that if we go down to the 45-minute as well. 45-minute time frame is really not giving us a whole lot to do. Back to that 3 hour time frame. If we were meso time frame trading this again, we still need to see price above 52,000. So we need if we wanted to be looking for the trend to switch and be entering into those long trades, price still has to rally fairly significantly here on the meso time frames. So we need to successfully complete that bottom feeder signal, book our profits for that trade, and then we need to see price continue to break above and hold above the $52,000 area with the rest of our indicators kind of letting us know. I'm not really expecting to see that kind of V-bottomed recovery. Oh, by the way, let's talk about this. On Friday's show, we had Mr. Kobayashi saying a V-bottom recovery in about 2 hours. So we definitely know that he is a herald for the short sellers. All right, we definitely know he's a herald for the short sellers because that's not what happened whatsoever. Let's see here. Let's see. Profit bear is all out of dip money. Well, you just gotta take a DeFi loan out on those holdings and just double down on that dip, brother. Don't do that. Yeah, aren't those the worst, Andrew Munns? Yeah, those are pretty terrible, man. I was getting those, but then I switched over to Call App Contacts Plus, so it helps me block unwanted spam. Of course, like Android native and iOS native, both have their own ways of dealing with this. All right. With that being said, let's go look over at Ethereum and see what we see for Ethereum as well. We'll go back up to the daily here on Ethereum. Is bottom feeder signaling on Ethereum? Bottom feeder is actually not signaling on Ethereum right now. So interesting. Bottom feeder signaling on Bitcoin, but not Ethereum. Ethereum had been holding up a little bit better than Bitcoin. But one interesting thing I kind of want to point out is that Ethereum looks precariously like Bitcoin did right before the drop. Okay. So again, I think that we can expect Ethereum to fall significantly more following a small rally here. I think a small rally, most likely following Bitcoin along, just to retest Bitcoin's baseline, from below, and then likely continuation to the downside. So trade in the direction of the trend. It's really helpful. We do see Ethereum here giving what would normally be a reversal baseline bounce opportunity. But here's the thing. I would not trade a reversal baseline bounce opportunity when we've tested that support more than 3 times. Okay. So this is going to be the 3rd time we've tested that support. So you could make an argument to take it, but again, I won't be, and I wouldn't recommend that you guys do either. You could apply, again, if you wanted to take multiple trades here, you could expect a small push to the upside here from Ethereum following Bitcoin along. But again, I think the continuation to the downside is the more prevalent trade here with Ethereum. So again, here's the kind of the point I'm trying to make here. We've tested the support here, we've tested it here, and we've tested it here, right? And here we are right back down again at that same level of support. And very similar to resistance, the more times you touch or test, you push at levels of support or resistance, the weaker they become. All right, they're kind of like they're barriers, right? And the more you push against them, the more you break against them, the more they are likely to break, and price is likely to continue on in that direction. So what we have here, the reason price is stopping here is because we have a buy wall. We have a buy wall at 39,000, give or take, here on Ethereum. And eventually, if sellers keep pushing price back down, and I think that's likely going to happen very soon here, once sellers keep pushing down, they're going to be eating up all the capital that buyers have to buy. And when all willing buyers have bought, there's only one direction price can go, and that's down. Let's see here. Andrew, I use Call App Contacts Plus. I'm Team Android, so I use Call App Contacts Plus. It's an Android app that replaces your native phone dialer, lets you have caller ID, lets you block unwanted numbers a little bit more intuitively, and I just really like their interface. I've been using it for about a little over a year now, I think. Yeah, maybe longer. Let's see here. Anyword says, is YFI going to 0? I don't know. I don't really have any big opinions on YFI. I know that. Yeah, I'm sorry. I could comment on something that I don't know too much about, but I'm gonna refrain. I know a lot about trading. I know a lot about trading Bitcoin and trading charts. Cybernetics asks, what baseline am I using there? This is the Eller's EMA Smooth. This is Eller's EMA Smoother set to a length of 60. So let's go down. and look for that. Interestingly enough, kind of getting the potential re-entry signal here on an Ethereum short as well, trading the meso timeframes. We can see price collapse below the baseline. And here we have one test of that resistance and kind of the secondary test. So this would be the opportunity to get in and look for that lower low. The other thing that one can do as well is take the breakdown trade once price closes below that low as well. It's going to be more traditional kind of trading metrics where you're typically going to be setting your stop loss at the local swing high. So stop loss goes right here, and then you target a 1-to-1 ratio. So if you entered here, you would be looking for, let's say you entered the break of that and you set your stop loss there. What would be your, so you'd be targeting at 3,672. So you'd be looking to set is where you'd be looking to book your profits. Or at least your first profit, move your stop loss to break even, and then you could book your other 50%. It's going to depend on you for those metrics. Beeflo says, that's how you've been avoiding my calls. Let's see here. Okay, so let's do a couple trade reviews here. So these are going to be, I'm just going to review some trades. The last two signals that were shared with the premium group. The first was going to be Alice USDT. Obviously, as you guys know, Alice did some big things over here. Our entry was on. All right, Alice's entry was on the 18th of November. So we entered into Alice on this candle. I do not have, so right now I've got the super duper DEMA strategy up right now. This is interesting. This is not the strategy that this trade was taken with. I was just showcasing, I was just working on this over the weekend, so we can take this off. Entry on the 18th, as we can see, we tested resistance once, twice, 3 times. And I'm just kind of pointing out, these aren't the metrics that we use to take the trade. We just used our objective technical strategy that called the system, that called this trade. But again, just more discretionary things that one can look at. Test of resistance, and again, another test of resistance. No sell-off following that test of resistance, and then price skyrocketed quite a bit. We had our first take profit relatively quickly right here on this candle, and then price continued to rally. Let's see here, from entry, almost 70%. All right, so we had lots of take profit opportunities for members, yeah, it's a good trade. Alice is right now back down, kind of consolidating where it has been for quite a while. So, V-leg up and right back down to where we started. Again, I think that short-term trading opportunities on altcoins are likely to play out well. But again, this is an area of the market where I think, having some caution whenever we switch from one major market cycle to the other, you always kind of want to be cautious, right? So we can still continue to see altcoins bleed out here, particularly if Bitcoin does not make such a dramatic movement, right? It's going to take some time for the money to flow back into the altcoins, and I think to get this kind of rallying going. And in the short term, I'd be pretty cautious of individuals looking to take profits and book profits on the backs of unsuspecting retail traders. So that's about it. All right, let's see here. The other trade I wanted to point out was MATIC USDT. All right, let's see here. Let me look up MATIC. We entered into on the 2nd of December, so on this candle right here. And this one didn't have a lot of appreciation, but again, I just really love our take profit system. On the very next candle, we did have a nice larger move from peak to trough, and that's how we were able to hit our take profit. Yeah, 12% move. Our first take profit level was set at $2.33 and 2.332. So we did it our first TP right here on that wick. Trade exited, and then our stop loss moved to break even, which was hit on the next candle. So in total, up 1% of total ROI on those two trades. And That is off a simple 5.9, so off a 6% movement. On Alice, we were able to make half of our account, and off of the MATIC, which was a 4.66% movement. That's after the entry and the exit are averaged. After the first take profit and the rest at break even are averaged. Again, these are just almost like averaged out. That's 5% movement. This is daily volatility for cryptocurrency, 1% of your account. You just carry on. You just continue that, continue that, continue that. Profit Bear is, I'm still waiting on Coinbase to allow me to use my PayPal credit to buy me some more Bitcoin. Cybernetics is expecting some huge bounces. I don't disagree with you. We are going to see some altcoins yo-yo back up. I'm just more in the mind of thinking, I think for the long term, you know. You know what we've seen in previous market cycles, or at least what we saw in well, you know, it's kind of interesting. What we saw in 2018 was BTC top and then sell off violently, and then altcoins rally. So a very similar thing. That same thing did not happen. Really hasn't happened since. So like people talk about alt season as if it's correlated to Bitcoin, and only in the sense that if Bitcoin is moving up and moving sideways, that's when you tend to see the largest altcoin movements. But as the market has become a little bit more less dependent, as the market has become less dependent on Bitcoin in general, and I don't want to say that as a bad thing, the market's still heavily correlated to Bitcoin. But as Ethereum has kind of come to stand in its own right, and so many things running on the Ethereum protocol, so many things running on the Solana protocol, so many things running on the Tron blockchain, for example. Well, that's not true. I don't think anything really runs on the Tron blockchain. A few things. We've seen altcoin prices become a little independent. Now, of course, if there's a crash in Bitcoin, you're going to see the altcoins move down as well. Yeah, not sure what my point was there, but Mr. Ether says he's smart enough to know that he has no idea what the market is about to do. That's what the smartest of us figure out. Yeah. We don't try to predict. We just move in the correct direction. All right. Let's go take a look at the kind of the big movers for the day and look for trading opportunities there. Specifically, I want to focus on LRC up 10% and Cake up 10% as well. We're also going to go look at Blockstack and probably BTT if we have enough time. All right, so let's look at LRC. All right, so you know this is the reversal baseline bounce that I like to see. Apparently, there is a massive surplus of pineapples in stores, and they're on sale. How that happened, I'm not sure. I'm not sure either. Maybe less pineapples were used for Thanksgiving this year as we kind of transition away from a pineapple culture to a, I don't know, whatever culture does not eat pineapples. Alex81SG. What are some high-level things to look at to rebalance the BTC alts ratio in a longer-term portfolio? Well, okay, so here's the thing. The best method of rebalancing your portfolio is with proportion size, okay? So what this means is that you're going to predefine, based on your risk tolerance, what portions of your portfolio you want to contain what, right? So i.e., you want to look at your portfolio's valuation and what portion of your portfolio contributes to that valuation. So if you want to be a conservative cryptocurrency investor, you would have a portfolio that looks something like 50% Bitcoin, 30% Ethereum, 20% altcoins. That's relatively conservative, right? If you were very aggressive, you'd be looking at something like 10% Bitcoin, 5% Ethereum, and 75, and 85% altcoins. So looking at your, you set those predetermined percentage levels, okay? And then you rebalance at whatever time frame that you want to. So most investors are going to rebalance once a year. Some can rebalance twice a year. So this can be biannually. You can rebalance every quarter, or you can rebalance every month. The more often you rebalance, the more likely you are to make mistakes. But also, the more frequently you rebalance, the more you are likely to actually catch those relative peaks of the market. It doesn't all just average out. Now, personally, I'm going to recommend that everyone does the more conservative, but you guys are free to make your own decisions. Obviously, you guys know this. So that is going to be very simple and easy to execute on, right? And it's going to be something that you can consistently do. So what that means is that you just simply look at how the market's moved. Let's say you're rebalancing monthly. So if you see that the proportion of your you are getting an outsized proportion of profits from one individual coin, you're going to take that money and cycle it back into something that is giving less, right? What that means over time is that as coins rise, you're going to be, and this is particularly true of altcoins. If the altcoins in your portfolio are performing very well and you're rebalancing on that scale, that you're going to be able to capture those profits and move those profits into something that is not moving as slowly, that is not moving as quickly, i.e., it's going to let you capture those profits that you're going to make on the altcoins, which you normally aren't going to in the long run, right? We've only seen, well, I don't know. I don't necessarily want to say that, right? There's a lot of altcoins that have continued to perform very well. It's just that you usually look at, or this is how the space has operated thus far. You usually look at, you usually see like either once altcoins peak at their zenith, right, they don't tend to perform as well. It is the smaller basket of altcoins that outperform their market high once they make it significantly, right? Most do not. Most pump up, most come down, and then most become trading instruments and pump and dump instruments. You can just see this as the top 10 recycles every year. Every year, the top 10 recycles. So I think that's the best way to approach. I think that's the best way to approach portfolio management. In my opinion, that's how I approach it. Well, honestly, the way I approach portfolio management is I just simply book profits when I think that I've achieved my optimum level. So I generally have a preset amount of profit that I want to make on a particular coin. And once I make that, I roll my long-term holdings back into something that I want to hold for the real long term. Now, as the cryptocurrency markets have evolved, I have actually expanded that horizon into other things as well. So originally, like when I first started in cryptocurrency, I only wanted to make more Bitcoin. I only wanted to make, and then I was skeptical on Ethereum for quite a while. And then Ethereum, as I saw its kind of purpose and potential, became part of my long-term holdings as well. Other things that have become part of my long-term holdings include things like Moonriver, things like Solana, things like Blockstack, for example, because I think that those projects have real legs and we'll see a lot of use case. Cake, because I do like PancakeSwap, and BNB have also gotten added to my long-term holds as well. And the reason those are my long-term holds, and this is my strategy for long-term holds, is that I hold my portfolio. I don't trade my portfolio. I think that's the most foolish thing that traders can do, because it's going to be the exact same concept as like this massive risk, kind of Wall Street bets BS. That gets a lot of people in trouble, because you're essentially trading with your entire stack with no risk management. You can utilize risk management. It's just that your losses are going to be outsized, and you're not going to be able to sustain that on a consistent basis, right? So again, you guys know this. The criteria for long-term investing in altcoins is simply, or any cryptocurrency or literally anything out there, is that I only buy things that, for the long term, that make sense to me, that I believe can change the world, and that I fundamentally believe in. All right. So Bitcoin and Ethereum fit that role. Bitcoin and Ethereum now fit that role. Solana and Moonriver fit that role. BNB fits that role. And hey, STP, good to see you, man. And I think that is just the best method that I've been able to come up with, right? That's the only strategy. That's the only method I've been able to derive that allows me to have the courage to hold on to these things when the market corrects so significantly like it does. You know, if I panicked every time Bitcoin dropped 40%, I would not be where I'm at today. If I panicked every time Ethereum dropped 80%, I would not be where I'm at today. If you hold on to things that you believe in for the long term, then you have the ability to hold these things through corrections and the ability to continue to ride out your investment as it continues to push on and make new highs, which I believe is going to happen in cryptocurrency. I think Bitcoin is going to continue to go up. I think that Ethereum is going to continue to go up, whether it takes a year, 2 years, 5 years. I'll still be alive, barring a catastrophe. And so I know that if I'm patient, I can realize the largest potential gains for my investment. Now, how do I deal with the fact that there's going to be periods in the year, long periods historically, that do not give me those returns that I need to trade? All right, you can trade in an up or down market, and for those very reasons, I guess this is exactly why we do what we do. Right on Rice, how would I break up $2,000 right now? I would put 1,500 into deep fried pork belly on a stick, 500 into bacon. It's pretty simple. So what would I put? What would I put if you gave me $2,000? What would I put it into right now? Well, it depends on whether you want an aggressive or conservative portfolio. So a conservative portfolio would be relatively easy, 50% into Bitcoin. So that'd be 1,000 into Bitcoin right off the top. 30% is going to go into Ethereum. So let's say of 2,000, 10% is going to be 2. So 246 grand is going to go right into Ethereum. And then we've got $400 that we can put into. I would probably buy a split between Moonriver, and then I would buy I would buy Moonriver, Solana, and BNB. That's what I do. Put it all on Revest. Go buy some puts. Okay, so let's talk about LRC right here. LRC being buoyed along by the LRC being buoyed along by the kind of the rumors and the idea that there is going to be a GameStop partnership. So we did make this nice double top in the market before this pretty nice correction. So loopering actually looks good here for a buy-in opportunity. We did come right back down to the daily baseline. We put in a long-legged hammer doji right here, and although we did correct a little bit more following that, I like that we closed above the baseline and we are holding that level. So let's actually see. Oh, bottom feeder didn't fire in any of these areas. So even if we just simply correct and make a lower high, we'd still be looking for price to come up to at least $2.68, which is going to be 16% above where we are right now. So I do see a 16% trade in on the market. And then what I would be looking to do is either exit right there with all of my position, or I'd be looking to take it up to $2.94, really not above $3. That's going to be that last level, because right then we're going to be crossing into that level of supply. So we had this is where the selling begins, right? We have this level of supply form here. And so this is where you have instantiated sellers who do not, very similar for instantiated buyers, who do not want to see price move past their entry position. So this area is likely going to be protected. I do like, again, let's bring this back up, I'm sorry. That 50% movement is the lower area of that range, so very likely for price to get up there at $2.68, whereas that upper range is kind of the more tricky area. Book profits there and wait to see what the market's going to do. All right, loopering pretty easy. Let's go take a look at block stack. Again, kind of a very similar setup here for Blockstack. These are dips I don't mind buying, right? We have a pretty sharp move down to the baseline, and we're going to usually get an impulsive recorrection back out of that. So, excuse me, large movement up, impulsive correction, large movement down, likely correction back up. The safer way, again, I just do this the more conservative way. Individuals love that kind of Fibonacci 618 stuff. Works like 50% of the time for me, but I do find that 50% movement is the better number to target for. So I could see Blockstack from here moving up to $2.50 at least. So that's going to be a 14% movement. So nice recovery from Blockstack. And then very similar, I'm of the opinion that we're likely to continue moving down. So we'll see how the market is evolving at that point in time. Let's see here. What's the other coin that I want to look at? Cake. And yeah, Cake. All right. Cake is kind of interesting here as well, but maybe fallen off the face of the map. So Cake has come all the way back down to the previous demand zone that we hit once we corrected from the rally in May 2021. So we had a nice triple bottom here before price moved to the upside and had this kind of last nice massive rally that we had back in August. And we've pretty much consolidated since then. And then starting in November, Cake really began its downslide. I do like where Cake is at. This has been in the area. This has been the demand zone where price has historically turned around. So a good buying opportunity for Cake. Now, again, being conservative, where would we want to take this? For this trade, I'd actually look to take this all the way back up to the baseline for 40% movement here on Cake. And then we'll see if we're actually going to get an uptrend, like a significant uptrend out of that. And I know like 40% doesn't sound like much of a rally. It sounds like a pretty big rally. But again, this is just what we're looking for in this particular area of the market. You can see something very similar happens here on this large correction. Once we get back down to this area of demand, we do have a pretty significant rally to 65% rally all the way up almost to the territory of the baseline. We do miss that on the first slip, correct, come back up again, come close to the baseline, correct, and then we break through on the next rally. So can we see something similar from Cake here again? I think that we can. So Cake's going to be in my buy-in area right here. I'm actually going to put this on my watch list for the day. Not the green one, the red one. Red ones are trades that we haven't entered yet. And as well as LRC. Yeah, LRC is going to go on that list. And Blockstack. Okay. Layer 2 is the hot meme? Maybe, possibly, potentially. So, again, this dip buying strategy is pretty simple, guys. Looking at coins that have held up relatively well and that are rallying today, looking at the daily charts to determine kind of where they are, and then looking for reasons and looking for trading strategies that kind of coincide with those. All right, now what we're going to do is let's go look at let's just scroll through. Let's scroll through Bybit and look for lower time frame opportunities here with our super duper DEMA strategy. All right, so on the LTFs, Bitcoin actually entering into this long right here. All right, you guys can, oh, it just flashed off. Let's see, let's wait for that to happen again. And why did it flash off? Because we're not quite there yet. All right, so Here on the LTS, we actually need to be getting above $49,513, and then we're going to be getting that trending long signal again here, looking for that 3% movement out of BTC to the upside. That's how the super duper strategy is working. Let's see here. Yep, and we did take the long. We are currently in this strategy is currently in a long on Ethereum here as well. It's currently in a long on EOS as well, as the market seems to be moving up here a little bit. Recalculating. All right, this market took the short on XRP and exited right here. So it is out of position on XRP. Let's see here. Solana, we entered and exited on the same candle after we booked our 3% profit. Solana still struggling to do this breakup, although it does, again, here, looking at the lower time frames here now. So very similar. Here's Cardano. This strategy took the short on this candle right here, sat through a little bit of a correction, and then on this next impulsive move down, was able to book profits at 3% right here. Let's see here. So Cardano, again, very similar to some of the others that we've seen, still below that 200 period moving average and not giving us the buy signal yet. Tezos, profitable trade here. No signal yet, still below. BNB, we're in the long as well. So we are in, so this strategy has us long for today on BTC, Ethereum, EOS, and BNB now so far. AXS, not even close. We entered the short, booked 50% here. Still in the AXS short trade. XRP booked profits on the short, and XRP has not yet rallied enough to get the trading signal. Polkadot, again, no signal yet. Let's see here. Not quite there yet. Link USDT booked profits on the short and not rallying enough yet. Litecoin, we're getting close to longs on the Bob the Builder. Thank you so much for the $5 super chat, my brother. He says, flash on, flash off, sensei. I appreciate that, man. Crypto Rick says, what percentage do I currently have as investment versus a trading balance? So I trade with 10% of my investment portfolio. That's the current number. That has changed throughout time. There have been times where I trade more, where I trade less. Right now, I'm not as prolific in my personal trading as I have been historically. So I'm trading far less right now than I was a year ago. And I'm spending most of my time on creating new educational content and developing new strategies. My current goal is that once I have the strategies that I'm really happy with, and I have quite a few that I'm happy with right now, but what I'm working toward right now is a little bit more advanced. I am trying to create dynamically scaled risk adjusting strategies that are not congruent. I want strategies that disagree with each other. And what I want to happen is that the spread on the difference between the profits and losses of those trades is what I want to consistently book as my profits, right? So once you get to a certain level of profitability, you know, and maybe it's just something as perhaps it's as you grow older, right? Too, because you know I'm getting on there in years. Preserving your capital becomes the most important element, right? Not aggressively making more, it's preserving your capital that becomes important. So you look for more conservative ways to book more consistent profits, which I think is the best thing to do anyways. I don't like this whole like YOLO all in. It's just not a sustainable or good way to make money. Like it's gambling. And one thing that I found interesting is that the rise in gambling, like I cannot believe, actually I can, it's just a sign of the times. So every time I see the TV on nowadays, it is a sports book ad. It's some kind of gambling ad. It's just some kind of gambling ad, right? And I don't think it's coincidental that the effect of COVID on market participation and this recent rise in high risk, high return gambling trading strategies I don't think that that's any. I don't think that that's any mistake or any. I think that that's all connected. I think that the fact that the economy is in shambles, and I think the fact that we are at a kind of an unprecedented time in history. Well, it's not really unprecedented. It's happened many, many times before. This is just late stage capitalism for you guys. I don't think that that is any. I don't think that's any coincidence, right? That the appeal of gambling is coinciding with the faltering economy. It means that on average, more people are willing to risk it all for the shot of having something, because the reality is there is not just, for most individuals, there's not very many sustainable possibilities out there that are more conservative, that are less risk. And that's not a place you want to be. That's a very dangerous place for society when you are incentivizing individuals, when individuals are incentivized to take massive risks and disincentivized from being conservative and growing. Peckham08 says he thinks he grew up a decade over the last few weeks of trading. Yeah, that will happen, man. All right. All right. So Litecoin here, not yet giving the signal. Let's go take a look at Dogecoin. We are long on Dogecoin right here. Let's see here. Entered the short. Didn't book profits on the short. Actually took a small L. That's the first loss that we looked at today on Dogecoin. So all the markets consolidating here and looking like we are making a push to the upside here. Let's see if this is able to be sustained. Let's see here. Didn't take the long on MATIC. So flat on MATIC. Long on EOS. Let's see. Let's take a look at Uniswap. Nope. Uniswap needs to get above 16,893. Let's see here. Sushi, we need to get above 5,416. Here we see Sushi booking profits on that short right here. AVAX. Let's see. Already booked profits. Already hit that 3% mark on AVAX right here. Entry on this candle up 3%, booking profits. Stop loss is going to be at break even. Looks like we haven't quite hit that yet, but almost. Yeah, looks like we're probably going to be out on this candle right here. Aave, flat. Phantom, flat. Bcash, flat. Algorand, another long-term hold of mine, flat. Ethereum Classic, flat. We already booked profits on this short. Let's see here. File, flat. Compound, long on Compound. Flat on Stellar Lumens, flat on ICP, flat on Bit, flat on Sand, flat on Gala, long on Mana here. Flat on, actually we're short on Shiba. There's that loop ring that we were just talking about looking attractive as an entry. Already booked that 3% profit right there. Engine, looking for that position there. Alice, flat. Atom, flat. Flat on Woo, flat on IOTX, and flat on Amisago. And Luna, you know, what's interesting is like just this morning, I was reading some crypto news about how Luna held so well up, or, you know, how Luna actually like moved up, like kind of during the dip. But, you know, these things are all the same, man. If you see a news headline for something, the worst thing you could possibly do is run out and buy it. That news headline is there to catch retail investors, to get them to put their money in when savvier investors are making their sells. It's not the place you want to be buying. Texaco, hey, Justin, when did you come back and where have you been? I've been right here, brother. No, not really. I took a year-long sabbatical to focus on my daughter. And now I'm back at it, man. So thank you so much for the hurrah. All right. I'd say that's dumb money then, Andrew Muntz. I mean, listen, not that I love Algorand, but it's timing is everything. You know what I mean? As with everything, timing is everything. Let's see here. All right, let's close this out. Let's get back to, actually, let's scroll up here and get back to Bitcoin. Yeah, so we are about to get this long signal any minute. If we can continue to push a little bit higher here, 49,502. That's what we're looking for here, guys. 49,502. Two losses, one win, big win. All right, let's see what kind of recovery we can see out of Bitcoin today. Again, just to recap, because we're going to be vamping out here in a little bit. I mean, Algorand could overtake Ethereum. It really could. Anything. I don't, Ethereum's got such a big network effect, but I mean, all these protocols have to do is be better than Ethereum and then be successful at onboarding all the projects onto them. That's really all they have to do. Or attract more popular new alternatives. But the big problem with the Ethereum blockchain right now is that it's basically like anybody who wants to utilize Ethereum is screwed. The gas fees are just too high. It's too high. And I'm just not certain they're going to that Ethereum going to a proof of stake system is going to fix that underlying problem. It's like too little, too late almost, Andrew says, "Hey man, it is, yeah, of course, it's his money. Just like mine is mine." Let's see here. Oh yeah, let's go back up to the daily and just highlight what we're looking at for the day. All right, guys. So what we're looking at for the day on Bitcoin is following along with this bottom feeder signal. Bottom feeder is indicating a take profit available for buying the dip here. So we're looking to take Bitcoin up to 53,260. We're going to be monitoring for a reversal baseline rejection, so signs of topping below the baseline or price actually touching and testing the baseline. There will be adding to our shorts or entering new shorts depending on where you are or how you're following along, just kind of how the system plays out. Our 3-hour, our meso time frame systems are still short, so we're going to hold those open. We've already booked profits at the 50% mark, and our stop losses have been moved to break even. So meso timeframes, we're still short on Bitcoin. Daily timeframes, we're still short on Bitcoin. We are going to be taking Bitcoin swing reversal trade up here to 53,276. Of course, that number is going to change a little bit throughout the day until the daily candle closes. And again, as I just restated, we're going to be looking to re-add to our shorts on that rally, on that little correction back up to the upside. Everything's still looking pretty negative on the daily. Again, there are going to be some bigger gains in altcoins if you're able to get in on these dips as well. We looked at a couple juicy ones, including Cake, Loopring, Blockstack, and MATIC, looking pretty decent. And then but yeah, not entering for the long term, still expecting more downside. We will see, but we're open to how the market changes, right? If Bitcoin is able to hold above and consolidate above the baseline, then we'll be looking to be a little bit more aggressive with our plays. As for right now, just doing some dip buying opportunities for this market correction. Going to profit off that, book our profits, and then just step aside and hopefully let our shorts ride themselves out. So you're telling me that Squid Games is based off Crypto YOLO. I'm saying that Squid Games is a direct the popularity of things like Squid Games is kind of a direct representation to the desperation and the failing, the failure of our society's ability to give people good opportunities and good options. The rise in popularity in gambling, the rise in popularity in things like in concepts like the Squid Games, the rise in the rise in options, and the availability of high leverage or high risk gambling avenues, such as the popularity and the commercialization of sportsbook betting apps. Sports betting was not a popular thing. Sports betting has never been a popular thing. It's been a very niche thing. But now it's become extremely popularized. Why? Because people don't have much to do except sit inside and watch sports. And now they realize that they can gamble with their little bit that they can. These are dangerous times that we're in. These are dangerous times to run. All right, it's 12:16. We're gonna head out to. We're gonna book out just a little bit early today, guys. I got a lot of programming to do today, so I kind of want to get to that. And this morning I spent a lot of time with my dog, so missed a little bit of programming time this morning. So let's switch over to the big scene. We'll say our goodbyes, and we will see you guys here tomorrow. All right. Thank you guys so much for joining me for another episode of Cracking Cryptocurrency. As always, my name is Justin Wise. Hopefully you guys enjoyed the show. We did talk a lot about positions today. We talked about Bitcoin, Ethereum, Solana. We didn't really talk about Solana, did we? We talked a little bit about it, Solana. Loopring, Blockstack, Compound, Cake. Seeing that the market is in a dip buying opportunity, but only in the short term, not buying these things for the long-term hold, still looking to re-add to our shorts, still in shorts on the daily time frame, still in shorts on the meso time frame. So position yourselves wisely, pay attention to your strategies. And if you guys don't have a strategy, then this is a perfect opportunity for you to check out premium.crackingcryptocurrency.com. Links, as always, in the description. If you'd like our help building your own technical, objective trading strategy. If you guys would like access to our trading signals, our educational content, including risk management, as well as strategy creation, mentoring, all the frills, all the cake, we do it all. If you guys enjoyed this content, make sure to like and subscribe. That lets me know that I'm putting out good quality material and incentivizes me to continue making it and doing it for you guys. Otherwise, if you guys have any questions, comments, concerns, sarcastic remarks, hot stock tips, or death threats, please leave them in the comment section down below or stop by the Discord at discord.crackingcryptocurrency.com. Chat with us in real time. Until next time, we will be back tomorrow at. So I got to get this. I got to get this down. So we are going to be doing the shows at 11 a.m. MST. But as always, we've always kind of advertised that they're at 12 p.m. CST because I always lived in CST, but now I'm in MST. I feel like I'm rapping now. So anyways, we'll be back tomorrow at 12 p.m. noon CST for another episode of Cracking Cryptocurrency. Until then, trade safely, guys, and we'll see you on the other side. Cheers.